Hello everyone, and welcome to another educational video by canontrading.com. Today I would like to discuss a little bit Elliott wave. And obviously a few-minute video is far too short to talk about all the possible Elliott waves implication and applications. But two setups that I like, and I actually read about it from a booklet that published by Bill Williams back in the days. And the first one is a completed wave 5, and the second one is a possible completed wave 4. Now what we're looking at here is my CQG platform. I'm going to use a tool called educational tool, like to go back and see what it is. And Bill Williams talked about the awesome oscillator and a few other tools that he uses to confirm that there's a wave 5 that was completed. CQG will actually number the waves for you. So there's 3, there is 4, and there is 5. And for me, the way I like to go about it is when I believe there's a wave 5, I like to see a breakout below a recent high or recent support. So in this case, if you look at the chart, we had support right around here. This is the S&P 500 at 29.70 and a quarter, so 29.70. So I will draw a line, and once we broke below, the theory says that we should test the previous wave 4. Okay, and obviously this is a daily chart, and I picked an example that was a good example. But as you can see, we did not test wave 4, but we had a pretty good correction. And another way to go about it is to mark Fibonacci retracements and look for possible places to cover, possible places to use as a stop. And so this was an example of wave 5 that was completed. And in a minute here, I'm going to look for another example, this time of a wave 4, and see what it looks like. So
this conference will now be recorded.
Now that we showed one example of the completed wave 5 and a retracement, I want to take a look at a possible wave 4, and then a resumption of the trend that we had before. So in this case, again, I'm using CQG, and I have the Elliott wave indicator, and we do offer free trials for both CQG integrated client, CQG QTrader, and CQG desktop. Visit us at www.canontrading.com and sign up for a free trial. So over here, we're looking back. This looks like May, back in May. Suffer suggests we have a possible wave 4. And I'm adding my own 2 cents into it, and I got an indicator that I like, that I look to extreme oversold conditions and possible reversals, which is a topic for a different video. So once I got my little signal here, and again, this is my personal opinion and the way I like to look at the market, for me that was a sign, okay, we may resume the trend, the market can go up, and then I have to use my own tools and preferences on how to manage this. But again, this is a great example of a trade that did work out, and we bounced, and we actually looks like we tasted the previous high, which was really a nice example. What I do need to do is look here for some examples that didn't work, because otherwise I'll be showing you only the good examples, and that's not how the trading goes. But there are many examples where those setups fail. Again, Bill Williams does use the awesome oscillator, and he looks for divergence between wave 3 and wave 5. And also on wave 4 that we just had, let me take a look there real quick. He usually will not go in until this one becomes positive. But again, personally, I use my own salt and pepper to create something that fits my style and something that I have confidence in. Futures trading is risky. This is a matter of opinion. And those techniques, I'll be more than happy to explain and answer any questions. Feel free to call us at 310-859-9572. Once again, this was an educational video by Canon Trading. Thanks and good trading.